Hi guys, welcome back to this Money Control live stream. You're watching IPO Watch with me, Nandita Khemka, and today, it's a busy day for the primary market, but we are talking about the biggest issue that's opening today, Vishal Mega Mart. 8,000 crore rupee IPO has opened up for subscription, and the company has already mobilized 2,400 crore rupees via the anchor book. Some marquee names, global as well as local institutions. So you have Government of Singapore, Nomura, BlackRock, Government Pension Fund, HSBC Global, CLSA Global. A lot of these marquee names participating via the anchor book, and even in terms of domestic institutions, you have the likes of SBI Mutual Fund, HDFC Mutual Fund, Mirae Asset. You have ICICI Pru Mutual Fund. All of these names participating, but we have the management right here in the studios of Money Control to talk about the growth and expansion plans and what kind of store expansion plans they may have and what kind of revenue targets also investors could be watching out for going forward. But joining me now is Gunender Kapur, who's the MD and CEO of Vishal Mega Mart. Great to have you in the studios with us. Appreciate you taking out time and coming here to share your plans with us. First of all, congratulations. Great response from institutional investors. Marquee names, as I read out, participating by the anchor book. But I want to first understand the timing of this IPO as to why you chose to hit the market right now, because you are a zero debt, well-capitalized firm who is well-capitalized for future expansion plans. And, as I understand, the PE promoter is looking to, kind of pair stake from 97% to almost 76% or so. Why now? Give us a sense of the timing, and going forward post the listing, would there be more promoter stake sale? What is the roadmap looking like?
Great, thank you very much. It's a pleasure to be with you, and as you rightly said, we do not quite need any primary in the company. We are absolutely debt-free company. We have 700 crores of cash on balance sheet, and we have therefore enough resources to finance a future growth in every which way. As you rightly mentioned, we have private equity investors, and they currently hold about 98%, 97 to 98%, I think. And with this dilution, their stake will come down to 76, 77. But they will continue to be the promoters, and they have a long-term interest and very excited about the future. Our current investors have been invested for over 6 years now. And the purpose of this dilution, which is quite small, is to take the company public, and there is no other objective behind that.
Right. Right, got it. Let's talk about the business in greater details. Then you have a diverse portfolio of your own brands. I think the apparel segment is entirely your own brands, right? As far as the notes that I have made, in FY24, 19 of your own brands generated sales exceeding 100 crores each, with 6 brands surpassing 500 crores each. So that's great going. But are you planning to launch more? And in terms of revenue mix as well, want to understand, you have 3 segments, right? General merchandise, apparel, and FMCG. What is the kind of revenue you are generating from each of the segments?
So as you rightly said, there are 19 own brands which have more than 100 crores and 6 own brands which have more than 500 crores. And this contribution of own brands has been increasing over the years. Secondly, in terms of the future, quite clearly our ambition always is to make the aspirations of middle and lower middle income group India affordable. For this purpose, we continuously track the aspirations in a very rigorous way and then deploy our own brands to make them affordable. That's the way we look at a business. And we will continue to do that in future. We will continue to track the aspirations and make them affordable through our private brands.
Right. Sure. Let's talk about your expansion plans.
Sure.
In terms of expanding your footprint. You have pan-India presence. 38% of your sales are primarily from 3 states, UP, Karnataka and Assam. Are you targeting a particular region for expansion where you want to scale up your presence? If yes, which one would be? Where? So
we are currently present in 30 states and union territories, and our intent would be to cover the entire country. There are currently 3 states which are not under coverage, which is Tamil Nadu, Gujarat and Maharashtra. And right now the expansion is going on in Kerala. So we are very excited about the opportunity to continue to grow in the future as well.
But would you be looking at entering Maharashtra as well in the near future, or is it?
Our plan is pan-India.
All right.
Yeah.
Sure. Give us a sense of the same store sales growth, how it has panned out. I know you won't be talking about specific numbers, but any targets in mind, and also sales per square foot. It's somewhere around 700 if I'm not mistaken right now.
Sure.
So going forward, any plans to beef that up? If yes, how do you plan to do it?
So the few numbers that I can share are as follows. Last year, our same store sales growth grew by 13.6%. And it was double digit across our three businesses, clothing, general merchandise and FMCG. In the recently concluded first half of the year as well, we have grown at double digit. And double digit across all our three big businesses, which is clothing, general merchandise and FMCG. And to the extent that our same store sales are growing at double digit, our average revenue per square foot would be growing at the same number.
Point taken. In terms of retail stores, you have 645 pan India. Over FY24 to FY27, how much would you scale it up to?
As I mentioned, we are very excited about the opportunity to keep expanding over the country. And that is work in progress all the time. And yeah, we look forward to a great future.
Sure. So no ballpark figure as to, maybe perhaps scale it up to 1,000 or something like that. Nothing as of now, or you can't share?
I cannot be very specific.
Sure. Let's talk about the financials a bit then. I was going through your margin picture across FY22 to FY24. It has been in the 14% range. Are you comfortable with this? And aspirationally, would you want to scale it up to somewhere around 18 to 19%? Is that doable? And in terms of gross margins also, how are you placed?
So I would respond to that in a conceptual way. Our general gross margin is in the range of 27-28%. And our intent is to maintain it at that level.
Okay.
But on our EBITDA and PAT, if we were to grow at double-digit same-store sales growth and the cost grows lower than that, let's say 5, 6, 7%, then we would get the benefit of that operating leverage on our bottom line.
And in terms of profitability and revenue growth, 50% CAGR nearly, over FY22 to FY24, and I think in excess of 25% when it comes to top line.
Sure.
That is the kind of CAGR you have seen. That would remain constant?
We are very excited about the future. I'm sorry, I cannot say more.
All right, point taken. But of course, let's talk about the hot and buzzing space, quick commerce, where you have also made a foray.
Sure.
Early days, but there's intense competition. You have players like Swiggy, Zomato, what have you, Zepto. So how what is the kind of response you've seen? Early days, I know, but how do you really plan to scale it up?
So we started this pilot last year. It's a very differentiated offering to our customers. It basically operates within a radius of 8 to 10 kilometers of our stores. And if you were to log into our app, the closest Vishal store automatically gets tagged to you. So you can see the inventory of that store only. And then if you were to place an order, we can deliver to you, if you so choose, within 2 hours. And if you bought more than 300 rupees at no delivery charge. So as you rightly mentioned, we started this pilot last year. We've had good early response. And as we speak, we are rolling out this facility to other stores as well. And while it's going on at the moment, I think the latest number that I can share with you is that we are present at the moment in 390 odd cities now.
Okay, 390 cities. That's a good start,
Sure.
I would say. But, of course, in terms of competition, you have, formidable players like, V2 Retail, you have Bazaar Style, you have Trent, that's grown at a phenomenal rate, right? So how are you placed, where the competition landscape is concerned? And did you feel the need to adjust your price points to tackle competition? And would you be able, or would you feel the need to do so in the near future?
We are a fast fashion retailer, and our consumers and customers are young people. Fortunately, our India has almost 65% of the population young. So we are very focused on that opportunity, and as you've seen from historical numbers of same-store sales growth, we are making great progress in that area. Our pricing is such that we make fast fashion affordable for the young people, and that will always be the case.
Sure. Last question really, Mr. Kapur. In terms of return ratios, you've delivered high single digits, 9% in FY24. As a shareholder, what can one expect over the next couple of years? Your message to shareholders and what they should be expecting. I know you guys are very excited, and you had a great start as well, in terms of the anchor book and stuff. But going forward, what can shareholders expect, in terms of return ratios? Your message.
We are very excited to onboard long-term investors into our business, and I think we believe that it will be a good journey for all the long-term investors.
Can they expect double-digit return on equity?
I wouldn't be able to comment on that in a very specific manner,
Fair
as
point.
you would understand. Yeah.
Fair point. All right, congratulations on the IPO and all the best for the listing. And I hope to connect with you once again once your stock lists on the exchange.
I look forward to that. Thank you very much.
Thanks a lot.
Really appreciate that.
Thank
you.
Well, with that, we've come to the end of this edition of IPO Watch. Of course, stay tuned because in the next 1 hour, we'll be getting the management of MobiKwik as well. So see you then. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.